Do you need a grand trading strategy for big profits? Frankly, professional traders focus on just one thing every day: one good trade. Mark Bellafiore's book teaches that professional traders focus on just one good trade daily, not big, elaborate ones. In this video, we'll learn how top-tier traders achieve long-term success and master the mental game by focusing on a single good trade each day. So, if you want to improve your daily trading and make every decision like a professional, watch this video until the end. Let's get started. Chapter 1, Part 1. Mark Douglas says the real battle in trading isn't on the charts, it's within your mind. And to win this battle, some distractions trick you into following false signals. Douglas explains that alignment means all the noise is gone. Patterns, timing, volume, mindset, everything signals a green light. Now, let's talk about the right mindset for a good trade. Not being affected by yesterday's losses today. If yesterday's loss instilled fear in your mind, then no matter how clear today's setup is, an inner voice will tell you, maybe this will fail too. And out of this fear, you'll either miss the entry or back out from where you intended to go. What's gone is not yours. Douglas says that to be free from illusion, you also need system-based filtering. This keeps your risk consistent and maximizes your profit potential. When you trade every day by following the same setup, the same process, and the same discipline, winning becomes a habit instead of a complexity. Now, let's touch on some simple and practical points about the market. When you follow rules, show discipline, and book small profits, your performance demonstrates the power of your capabilities to others. This way, you establish yourself as a reliable name in the market. You can share tips or alerts, but everyone's true success is influenced by rule-based trading, not by recurring lucky signals. So why not just show one good strategy and help others follow it too? Now, let's discuss how this helps in life. Imagine if you develop the habit of one good trade every month, journal well from each trade, track emotions, understand the reasons, and learn from profits and losses. 1 or 2 such excellent trades a month will boost your confidence so much that your trading trajectory will accelerate like a chart.
And this habit doesn't just work in the market, it's beneficial in every aspect of life. If you handle small situations in a project, business decision, or investment, by following rules, problems will be fewer, and the chances of success will increase. In daily life, when someone asks you for advice, you naturally offer a good idea that fits their situation. This is the same mindset shift you learned in the market, a single, simple, powerful idea. And yes, thousands of small winning trades created in the future will make you a better, smarter, and happier person. This daily habit yields more profit than your investments because you start trading based on logic rather than emotion. Chapter 1, Part 2. Your brain works in 2 ways. First, what reacts quickly, and second, what responds thoughtfully. A good trader always keeps the second system active because a hurried decision, if wrong, will not only take away money but also your confidence. Therefore, a good trade is one where you're not overthinking, but your system has already thought it through. Staying away from trades that make you uncomfortable, that's the first rule. Mark Bellafiore says if the trade makes you uneasy, if you're constantly checking charts, if you want results too quickly, then it's not one good trade. One good trade brings you peace, not anxiety. Now let's talk about the preparation mindset. Trading is not a game of guessing. It's a profession. Just as a doctor performs a full set of tests before surgery, a professional trader asks themselves every morning, what am I seeing today? Which strategy am I prepared for today? A mental framework is very important here. When your focus is solely on making money, you start seeing every candle as an opportunity. But when you only look for one good trade, that's when you truly make money. If discipline were to be explained in one line, it would be, if you only seek one good trade. Long-term success in trading belongs to those who are process-oriented, not result-oriented. Now let's move on to another important concept. You need to track your patterns. Every person has certain tendencies. Some enter too early, some exit too late. If you keep making the same mistakes repeatedly, you'll never be able to update yourself. Therefore, it's crucial to keep a journal for every trade. Don't just write numbers in that journal. Also write your thoughts, feelings, confidence levels, and pre-trade visualizations. This will help you understand which days your mindset was right and when you were just hoping.
Another point, risk amount. Every one good trade will only happen when its risk doesn't create fear in your mind. If you've put so much money into a position that you can't sleep properly, that trade has already gone bad, even if it ends up in profit. Reduce the size until your trade size feels like practice. This is one of Bellafiore's most practical pieces of advice. Sometimes in the market, you might feel it will definitely break out. But until you've defined your trigger for that breakout, it's just hope. A professional trader doesn't hope, they act on confirmation. Now, if we apply this thinking to real life, its impact is also seen in business and relationships. When you make a deal, you don't just hope the other person will be good. You want to see if everything fits within the structure you've created. According to Bellafiore, you should have 5 things for a good trade. 1. A clear entry trigger. 2. A defined risk level. 3. A logic-based exit. 4. A trading journal. And 5. Most importantly, a cool head. Every time you follow these 5 rules, regardless of the outcome, you win. Now imagine if you adopted these 5 principles in every decision in your life. Instead of speaking without thinking, you speak thoughtfully. Instead of spending without thinking, you create a budget and spend. Instead of jumping at every opportunity, you consider its logic and timing. And after every decision, you review it. This is the thinking that not only creates a good trader, but also a refined human being. To survive in the market, you need a winner's mindset. This doesn't mean you'll win every time. It means that even if you lose, you'll get up and trade the next day because you haven't broken any rules. That's where the real victory lies, when you can be proud of yourself even if the trade didn't make money. When this pride is consistently built, profits will start coming automatically.
Chapter 2, Part 1. Every time you sit down to trade, you're actually fighting 2 battles, one on the chart and the other within you. The battle on the chart is easy. It has prices, volumes, data, but the inner battle is the toughest because it involves greed, fear, false hope, and most importantly, ego. Mark Bellafiore says the real game of professional trading is self-awareness. You can only make a good trade when you know when your mind is focused and when you're just being swept away by emotions. The easiest way to identify emotions is, am I entering this trade because of my method or just out of greed for money? If the answer is the latter, you're in trouble. A successful trader prepares themselves every day, just like an athlete warms up before a match. Trading is not a mood-based activity, it's a discipline. And like any discipline, your neglect is what you call luck. In reality, it's not luck. It's preparation that keeps you from chasing every trend and limits you to only those trades that are your edge. Now let's talk about edge. Edge doesn't mean you've found a magical setup that works every time. Edge means that you've built a system, you've tested it repeatedly, you've understood it, and you trust it. This is the first rule of one good trade. You first understand the trade, then you act on it. Another big idea is mental neutrality. Often when a trade is running, the mind either gets lost in dreams of profit or becomes restless to avoid losses. But Bellafiore says you cannot control market outcomes. You can only control the execution process. So whenever you're in a position, do only one thing. follow the process. Every great trader possesses this characteristic, emotional neutrality. That is, they aren't overly happy with wins. Instead, they focus only on preparing for the next trade, not like a robot, but like a professional.
Now, let's get to the most dangerous enemy that repeatedly brings every trader down: overtrading. Reacting unnecessarily to every movement, chasing every breakout, seeing every dip as an opportunity. These are the habits that slowly deplete your capital. Overtrading has two reasons. Either you're bored or you want to recover money. Both reasons are emotional, not logical. If you truly want to be a good trader, you need to develop a habit. When professionals see a bad market, they sit quietly. That's their trade. No trade is a trade, and often the best trade. Then comes review and reflection. After each daily trading session, you should scan your entire day. What good trades did you make? Why and when? What bad trades did you make? Was it part of your strategy or just emotion? Every professional has a daily trading journal, and they fill that journal as seriously as a pilot fills their flight report. This journal shows you who you are. It shows your reality, not the image you want to show on Instagram. Now, if you're thinking these things only work in the market, no. This is the mindset that can bring success in any field. Suppose you're running a small business. Every day you're making decisions: who to buy supplies from, how much stock to keep, when to offer discounts. If you don't review daily sales, if you don't see which items are repeatedly returned or on which days sales are down, then you're also trading without a journal. Bellafiore explains that trading is a mirror. It brings your thoughts, actions, and reaction patterns to the forefront. And this is the biggest advantage. You start to understand yourself through trading.
Chapter 2, Part 2. The biggest lie in trading is that the more you trade, the more you earn. The truth is, more trades only increase brokerage fees and decrease your focus. A good trader is one who can wait for their best trade and then act on it without hesitation. Mark Bellafiore says, "We are not in the business of trading, we are in the business of good trades." This means our job isn't to make money every time. Our real job is to only take that trade which is clear, confirmed, and aligns with our strategy. Now imagine what would happen if a surgeon rushed through every operation without reviewing reports, without any preparation. Similarly, if you jump into every breakout, react to every noise, you become your own worst financial enemy. So, one good trade is a mindset. Every day is a game, and your win in that game depends on one action. Did you make just one best, correct, and rule-following trade that day? If yes, then you've won. If you made 5 trades but they were outside your setup, then you've only gained exhaustion and frustration. Now let's talk about execution. Execution doesn't just mean entry and exit. It's the mental state where you convert your plan into action without fear or hesitation. Execution becomes powerful when decisions are clear. Remember, when you start to take a trade, your mind questions every second. Is this the right time? Am I too late? Will this be a fake out? But for professionals, the answers to all these questions are predetermined because they've created a plan. A plan where entry, stop loss, target, and position size are all written down beforehand. Bellafiore makes a simple statement. If professionals don't have answers to these questions beforehand, they don't enter. In other words, if you can't convince yourself of what you're doing, how will you convince the market? Now, in this section, we'll talk about a very important thing, scaling. This means how you start with a small size and gradually increase your trade. The very first responsibility in every trade is risk control. If a trade is taking 10 to 15% of your capital, that's not trading, that's gambling. A good trader never takes risks at a level that disturbs their mental peace. Bellafiore says, view every trade from the perspective that, even if it goes wrong, I'll be able to make the next trade peacefully. This is the professional approach.
Now, suppose you take a trade, initially keeping the size small. The setup was good, the entry was clear, and the trade is moving in your favor. Now you can add to it, that is, scale it. Scaling works where the initial signal is positive and the trade is getting volume, momentum, and technical support. But remember, scaling should not involve greed. The a little more mentality will bring you down at some point. So Bellafiore tells every trader, increase size when you're right, but don't be stubborn when you're wrong. Exit immediately. Now, a very crucial aspect, mistake management. What does it mean? It means don't be afraid of mistakes. Learn from them. Every new trader thinks they shouldn't make any mistakes, but the truth is, mistakes will happen. The real difference is whether you note them. Every bad trade can teach you something if you review it honestly. Did you trade against the trend? Did you take a trade outside your setup? Did you exit emotionally? The answers to these questions will strengthen your future trades. Professionals print charts of their best and worst trades every week and paste them on their walls. Why? So they don't forget. They remember the process of winning and learn from their mistakes. Now let's talk about tracking and recording. Bellafiore says every trader should create a playbook, which is essentially a list of their best setups. It should include screenshots, time, emotional state, and a small note explaining why that trade was great. This playbook is your trading Bible. Whenever you're confused, whenever you can't understand the market, just go back to it and look at your best trades. They'll show you the way. Finally, let's discuss the habit born from daily practice, the one good trade mindset. You can only develop this mindset by constantly reminding yourself of this rule. Today, I just want one good trade. Ignore everything else. Every day, ask yourself one question. Did I make a good trade today? If the answer is yes, you're winning. Even if you don't earn millions in a day, you're strengthening your mindset. And that's the investment that will make you a consistently profitable trader tomorrow. Chapter 3, Part 1. If you want to master any field, just doing the work isn't enough. You have to constantly review, understand, and improve that work. Trading is exactly the same. Just taking trades isn't enough here. Real growth happens when you document your trades, analyze them, and learn from them. Linked to this idea is a very important concept from Mark Bellafiore, the Trader's Playbook. What is a playbook? A playbook is a kind of personal trading guide where you record your best setups, their entries, exits, and risk levels. Bellafiore says every serious trader should create a playbook and update it weekly because it gives you clarity, discipline, and repeatable success within yourself.
Now think about it. When you're part of a football or cricket team, the coach prepares a playbook before every match. So how do you create a proper trading playbook? Step 1. Choose your best trades. At the end of each week, sit down and think, which trade was the cleanest this week? Where was the entry easy, the risk low, and my decision made with a calm mind? Now take the chart for that trade, mark the entry, stop loss, and exit. Then ask yourself, why did I take this trade? What factors made me believe in it? Did any technical, volume, or news signals contribute? Step 2. Write it down clearly on one page. Bellafiore suggests keeping each trade as a one-pager. This means only one page should contain all the information that will help you trade that setup again. Step 3. Include emotions. A trading playbook isn't just technical, it's emotional too, because a good trade isn't just about the chart. Your mental state at the time is also very important. Did you take the trade out of anger or calmly? Were you already feeling defeated, or were you coming off a win? Was there any external pressure on you at that time? Writing all these things honestly will connect you with yourself and help you understand the depth of your decisions. Step 4. Keep updating. Once you create a playbook, the work isn't done. Keep adding new trades every week. Every time a new setup works, include it. Slowly, this playbook will become a best trading resource for you, a book created by yourself solely from your experience. Now let's talk about another crucial aspect, pattern recognition. Bellafiore says true trading talent lies in recognizing patterns, and you'll only see these patterns when you repeatedly review your playbook charts, analyze them, and ingrain them in your mind. A good trader's strength isn't knowing every market movement. Rather, their strength is understanding the 3 to 5 setups that work for them so deeply that they can repeatedly turn them into profits.
Now, a big question arises, will just creating a playbook change everything? No. The playbook is your car's GPS, but driving the car, staying on the road, and maintaining focus are your jobs. So alongside creating a playbook, self-review is also very important. Every week, ask yourself, did I take any trades outside my playbook this week? If yes, why? What was the outcome of that trade? Was it FOMO or a reaction to insecurity? By adopting this process, you climb a step higher each week, not just in skill, but also in mindset. Bellafiore repeatedly emphasizes one point: you cannot consistently profit until you achieve clarity, and clarity comes when you create your own system. The playbook is the foundation of that system. Now let's discuss another aspect, pre-trade visualization. This means before every trade, close your eyes for a minute and think, what would this trade look like if everything goes according to plan? How would it feel if it fails? Am I prepared to accept that? This visualization prepares you, and a prepared trader is a calm trader. Calmness is what strengthens decision-making the most. So, from today, whenever you sit in front of your trading screen, don't just look at charts. Remember your old one good trade, open your playbook, and prepare your mind for that one right decision. Because in the end, one good trade isn't just a trade, it's a lifestyle, a perspective, and a commitment to your profession. Chapter 3, Part 2. Every successful trader has one thing in common, their routine. And this routine isn't limited to waking up in the morning and having breakfast. It's part of a complete trading cycle that makes every day productive. Mark Bellafiore says your trading day actually begins the night before, a day earlier. When the market closes, true professionals reset their minds and data. They think, what did I learn today? Where did I make mistakes? And what can I do better tomorrow? If you take just 15 minutes before bed to think about what your focus should be for tomorrow, then the next day will be in your control, not the market's.
Now, let's talk about the morning. Just as an athlete warms up, a trader also needs to warm up their mind and screen setup. Bellafiore calls this pre-market preparation. The first 30 minutes of the morning are the most sacred time for any trader. During this time, your attention isn't scattered and you can think with a clear mind. So, how should you spend these 30 minutes? First, check your news sources. What big events have happened in the market? Any earnings reports? Any global economic news? Next, focus on the market movers. Which stocks are showing the most volume or price movement in the pre-market? Then, open the charts and identify the levels. Support, resistance, gap up or gap down zones. This will show you all the key areas where traders will be active. And most importantly, review your playbook setups. Is there a chance a setup will form today? Does the market's mood align with your trading plan? According to Bellafiore, you should approach the market with the same preparation as a surgeon entering an operating room, with focus, clarity, and readiness. Trading session routine. When the market opens, many traders jump in hastily. They try to make quick profits due to FOMO, fear of missing out. But a professional trader knows that rushing guarantees failure. Before you start trading, ask yourself these questions. Am I calm? Am I following today's plan? If not, did I make an emotional decision? By doing this every time, you become a mindful trader who makes prudent decisions rather than quick ones.
Midday review. Around midday, the market often slows down, and this is when mistakes are most likely to occur. So, Bellafiore advises stepping away from the screen for 5 minutes around noon. This short break helps you do 2 things: recharge your energy and refocus your attention.
After the break, open your journal and answer these questions. What went well today? What went wrong? What can I do better tomorrow? You might think doing this every day is tedious, but these small changes are what make you a stronger trader. This book repeatedly emphasizes one point: your trading journal is your personal mirror. Ignoring it will halt your growth. Now let's discuss an incredibly powerful practice: daily goal setting. Setting goals in trading seems simple. For example, I need to earn 10,000 rupees today. But Bellafiore says we should focus on process-based goals, not monetary goals. That is, today's goal should be something like, I will only take trades that are in my playbook. After every trade, I will take a screenshot. I will only take 3 trades and update my logbook every time. These types of process-based goals will keep you away from money worries. And when you focus on the process, money will follow you automatically. Finally, let's talk about the shutdown ritual at the end of the day. At the end of each day, take 10 minutes to review the day's activities. Write down, what did I learn from the market today? Which stocks are worth keeping on my watch list for the future? In what situations did your mind get agitated and why? This 10-minute session will prepare you for the next day. Often, after trading, we directly move on to other tasks, but without a proper retreat ritual, the mind remains incomplete and the next day isn't clear. Bellafiore repeatedly states that the trader who creates a ritual for their process can last long in this business. And this is the most important thing for survival in trading. Because if you can survive, only then can you win. So now it's time to honestly ask yourself, am I following my routine every day? Is my focus solely on profit or on growth? If the answer is growth, then one good trade isn't just a concept, it will become your habit. Chapter 4, Part 1. The trader who chases only profits throws themselves into the fire of risk. And the trader who deeply understands risk is truly the one who survives in this game for a long time. That's why Bellafiore says risk management isn't just about avoiding losses, it's about avoiding destruction. Many new traders think that there will come a day when they will never lose money. But the truth is, losses will never stop. You just have to learn to control them. So the first question should always be, if this trade goes wrong, how much loss can I tolerate? The biggest mistake in trading happens when you start deceiving yourself into chasing a good opportunity instead of protecting your capital. Now think about it. If you invest 20% of your capital in a trade and that trade goes against you, you don't just lose money, your confidence also shatters. Bellafiore repeatedly says that risk management begins with one question: where is my stop loss? And this question should be asked before every trade, not in the middle of it. If you are trading a stock whose movement is uncertain or which has low volume, you have no protective shield. This trade becomes a speculation instead of a professional decision. A practical rule is to never risk more than 1% of your total capital. That is, if you have 1 lakh rupees, your maximum risk on a trade should be 1,000 rupees. This is where management begins.
Now let's talk about position sizing. Many times people ask, how many shares should I buy? The chart doesn't answer this. Your risk profile does. For example, if your stop loss on a stock is 10 rupees and you only want to risk 1,000 rupees, then you can only buy 100 shares, no more. This process saves you from emotions. You don't invest large sums of money out of FOMO or greed. Bellafiore then talks about the risk-to-reward ratio. If you're risking 500 rupees on a trade, but your target is only 400 rupees, then this trade is lost before it even begins. Professional traders consider such trades toxic. Every trade should have at least a 1-to-2 or 1-to-3 ratio. That is, if the risk is 500 rupees, the target should be at least 1,000 to 1,500 rupees. What's the benefit of this? Even if you are correct on only 4 out of 10 trades, you will still be profitable. Secondly, your mind will stop fearing losses, because losses also become part of a profitable system. Now the question arises, what if a trade is part of my playbook, but the market mood isn't good that day? The answer is, risk adjust, size down, wait. Meaning, when the market is uncertain, reduce your trading size, slow down, and wait. A good trader is not fearless, they are responsible. To understand risk, ask yourself these 3 questions every day. 1. Did I set a predetermined stop loss on every trade? 2. Did I reset my position size? 3. Did I follow the risk-reward rules on every trade? If the answer to all 3 is yes, then nothing can stop you from being on the right path. Now let's talk about a trader's biggest asset, emotional control. What do you do when your trade moves massively into profit? Bellafiore says, let your winners run. That is, if the stock rises quickly in your favor, apply a trailing stop loss and let the profits grow. This profession is made for those who can control their emotions with discipline. And this is the true form of risk management. It's not just about financial calculations. It's a game of mental fortitude, discipline, and self-control. The essence of this chapter is that the better you learn to manage risk, the longer you will survive in the world of trading. And remember, one good trade is one where the risk is limited, the process is clear, and the emotions are calm.
Chapter 4, Part 2. Every trader in their first few months thinks that if they just find a magical strategy, life will be set. But the truth is, no strategy works unless you understand the thinking and process behind it. Bellafiore says, the perfect setup doesn't work if there isn't perfect preparation. That is, income from a trade doesn't depend on how great the trade looks, but on how deeply you have prepared for it. A trader's greatest strength is their own trading playbook. A playbook means a list of all the strategies, patterns, and setups that repeatedly work for you. Now, the question is, what should a good trading playbook look like? Let's understand. A good trading playbook should contain only 4 things. 1. What is that trade setup? For example, breakout, pullback, VWAP, bounce, etc. 2. How many times have you tested that setup and what results have you gotten? 3. When should you not trade that setup? 4. What price action will the trade's execution be based on? When you start writing these 4 things in your trading playbook, you begin to transform from a common trader to a professional. Bellafiore tells every new trader at his trading desk, instead of jumping into new stocks every day, recognize your strengths. If you understand the VWAP bounce well, then only focus on that. If you can effectively capture price action on a gap-up opening, then only learn that deeply. Trading is a game of focus, not information. Every trader should definitely write this question for themselves. If this happens again, would I do anything differently? Bellafiore says, journaling transforms your experience into wisdom. That is, the more you think and write, the more your mind will start to understand those trades deeply. Experience in trading doesn't just come from taking trades. It comes from taking trades and reviewing them. Now let's talk about the biggest mistake after a trade: overreaction. Often, when a trade goes into a loss, the next trade is taken out of stubbornness, which is called a revenge trade. And when a trade goes into profit, the next trade is taken due to overconfidence. In both situations, your emotions are trading, not your playbook. That's why professional traders always say, take the trade, but then stop for a few minutes and think. Is the next trade equally clear? If the answer is no, then return to the system and wait.
Now let's discuss execution consistency. You won't see the same strategy in the market every time, but your thinking, your preparation, and your process should be the same every day. Bellafiore emphasizes this. Your process isn't for predicting, It's for keeping you grounded in your playbook, making small improvements, and keeping your mind calm. Because Bellafiore's deepest quote is, "One good trade leads to another good trade." Whether your next trade will be good or not isn't decided at the moment you hit the buy button. It's decided many hours earlier in many small decisions, which we call micro-planning. Most people think trading is one big decision, but the truth is, it's a chain of small decisions that, if you take them in the correct sequence and without rushing, result in a good trade. Bellafiore repeatedly states that traders don't fail due to bad markets, they fail due to bad preparation. So today we will talk about the preparation that distinguishes a common trader from a professional. First comes pre-market preparation. Before the market opens in the morning, do you just read the news, or do you also try to understand which stocks are most active today, which companies are releasing earnings reports, which ones have pre-market volume? A professional trader's morning begins like this. 1. They first check the volume list. 2. They then divide the stocks into 3 categories: strong, weak, neutral. 3. They then choose 1 or 2 stocks from each category and identify their levels, support and resistance. After this comes creating trade scenarios. That is, you ask yourself, if this stock goes above 140 and volume builds, I will go long. If it goes below 132 and shows selling pressure, I will look for a short. Now you are not trading, you are reacting according to a plan. Bellafiore calls this, if this happens, I will do that. This is micro-planning. Now comes the entry trigger. Many times people see the trading setup but miss the triggers. The reason for this is that they haven't set their entry criteria. A good entry trigger is price crossing a specific level with volume, showing buyer or seller pressure on the tape, and confirmation from VWAP or EMA. If 2 of these 3 things align, you are on a trigger. But remember, a trigger is not magic. It's just a signal that it's time to execute the plan. Now let's talk about position sizing. No matter how good your trade seems, if you get the sizing wrong, that trade will dominate your mind. As soon as the price goes slightly against you, you'll panic. Why? Because you invested too much. Bellafiore says, size kills, right size empowers. Meaning, if you enter your trade with the correct size, that trade will not scare you, but will give you confidence. A simple rule for position sizing is the 1% rule. Never risk more than 1% of your entire account on any single trade. If you have 1 lakh rupees in your account, your maximum loss on a trade should not exceed 1,000 rupees.
Now let's talk about stop loss and risk-reward ratio. No good trade should even begin without a clear stop loss. A stop loss is the point where you admit that your idea was wrong. Trading without a stop loss is like driving a car without brakes, the ultimate outcome of which is only an accident. A good trade always maintains a 2-to-1 or 3-to-1 risk-reward ratio. That is, if you risk 1,000 rupees, your expected profit should be at least 2,000 or 3,000 rupees. Now comes during the trade discipline, meaning how you behave during the trade. Most people either panic quickly and take profits too soon, or they stay in a losing trade thinking it might turn around. But a professional's mindset is, I will do my job, the market will do its job.